Yeah, you hear Joe Kernan on CNBC say, "Prepare for the halving," but it's never more true than for Bitcoin miners to prepare for the halving. So, how are they preparing? Because I know there's different ways to do it, and kind of what are you guys hearing? What do they need to do? And then maybe we can go into like which mining companies do you think are like best positioned? So, how are miners preparing for the halving, and then which miners do you feel like are in good positions to kind of thrive post halving?
Yeah, I think last year was when they really started setting the groundwork. I mean, you really wanted to be thinking a year out or longer in terms of how to position yourself well for this event, right? I think we covered one of the things, right? Like miners sold a lot of equity last year. So they padded their balance sheets with a lot of cash. A lot of them shed debt. They used some of that cash not just to pay off debt, but they used it to also expand their fleets and buy next generation ASICs. They also used it to develop new sites like Riot developing their 1 gigawatt immersion site in Corsicana, Texas. I'd say that the biggest things that we've seen, at least in the public markets, because all of that's all of that stuff is totally disclosed in SEC
Mhm.
filings. They've been stacking cash. They've been much more prudent with treasury management. They're no longer just like Matt said, hodling and letting it ride. They're paying off debt and they're expanding their fleets and trying to get their efficiencies up. So I'd say that that's what we've seen the most. And obviously, they're also hedging their revenue uncertainty with Luxor's hash rate forwards. Um, but so, yeah, I think that it's kind of just the basics, right? You want to be debt light, you want to be cash heavy, you want to make sure that you have the latest generation machines. We've seen strategy shifts too. Like Marathon used to be super big on asset light. That was their whole pitch. They just bought a bunch of machines, hosted them around the US, and they recently bought two facilities that Compute North essentially relinquished to their lender in the bankruptcy. I think it was the Kearney, Nebraska facility and Granbury, Texas. I could be wrong about the Texas one, but Marathon recently purchased both of those from Generate Capital. And so we were seeing their strategy shift from asset light to, oh, well, actually, if we're going to survive long term, then we're going to need to vertically integrate.
What about you, Matt? Like, what do you see in terms of the halving? One of the things that you see in past halvings is you see a large decline in hash rate as mining operations become unprofitable or old machines come unprofitable. You see them flip off, and you see kind of a sharp decline in hash rate post halving. Do you think we're going to see something similar?
I think it is going to be a bit muted. I think with this cycle, we've seen, probably over the last 6 months, is a huge amount of effort going into refresh of machines and trying to get more efficient machines. So I don't think, outside of maybe a couple exceptions, there's probably not a whole lot of people that are just sitting on a bunch of S9s that are going to turn off. Like, maybe there's some of them, but I don't know how impactful that'll be to the overall network. I think people are more prepared. And then also, you had this unprecedented pre-halving Bitcoin run. Typically that's happened at, a month or so after the halving. But we've got, miners got this nice cushion going into it that wasn't expected. And so I don't think it'll be quite as dramatic as we've seen previously. Although, I mean, who knows?
Yeah, right. I mean, Bitcoin could get a 20% haircut over the next week, and then
yeah,
the equation completely
That'd be
changes.
awesome.
It's not weird.
Yeah, discount.
It's not weird for it to get a 10% haircut in a couple of days. Like 20, 30% is not unusual. And so, to your point, like you could get a massive drop right before. But I don't know. I personally don't see that, Sam. I think we might see some effect at the halving. It's probably natural, but I don't think it'd be nearly as much as we've seen previously.
Yeah, and just to piggyback off that, we build projections for hash price, hash rate, and difficulty at Luxor. It's part of some of the research that we provide. And we have a halving report coming out tomorrow where we actually look at a bunch of these different scenarios. So like looking at a base case hash price scenario, bull, bear, stress case, and super bull scenario. And if we stay if we stay at the trajectory we're at right now with Bitcoin's price, and the current rate of hash rate growth, I mean, it's conceivable that you only see as much as 7, maybe 10% of network hash rate come offline after the halving. Because like just to kind of give an idea, like right now, hash price is at about what is it, $103 per petahash per day. So if the halving were to happen like right now, then that would go down to like $51, $52 dollars per petahash per day, and that's not too far off from all-time lows, right? And that was at a time when we had, the average fleet efficiency was not as good as it is currently. To what Matt was saying, miners have next generation machines, so it's looking like, at least in the immediate aftermath, it's probably not going to be much. And if Bitcoin really continues to rip, then it might not be any at all.
Well,
I mean,
energy prices have come down too, and that's the other
Yeah.
thing. People have spent a lot of time, they got run over with high energy costs, like while Bitcoin was tanking. It was like the worst possible scenario. But now we're seeing the inverse. So, there's some cheap energy out there, and I think people have made put a lot of effort forth to get in better energy contracts. So that kind of lowers your floor a bit. But also, to what Colin was saying, I was just looking at our forward market. I think the market's pricing in somewhere around, $54, $55 post halving for a hash price,
which is crazy.
Yeah.
That's crazy.
Yeah, what would be a hash price level where these, let's say public miners would start shaking in their boots a little bit and really struggling? Like, is there a level where you're like, oh, people are going to start struggling here?
It's not that much lower than that, I can tell you that. But
Yeah.
But originally I think we were saying something around like 45, 50 after the halving, but I think that's improved since we last looked at it. So I would say, somewhere below 40 where I think people would start getting nervous.
Yeah, I think that's probably right. I mean, and it depends on what machines they have, right? Like, assuming they've got all S21s, which they don't have, but like in a perfect world, they have all next generation machines. Even at $40 per petahash per day, your break-even electricity cost is like $95 per megawatt hour. So like $9 and for smaller miners, like our home miners out there, like 9.5 cents per kilowatt hour. And
or 16 in our home state, Sam.
Hey, it's not bad. You could be California and rocking 35.
That's true.
This is like just absurd.
Yeah, I got a couple S9s over here that are just
But yeah, I think if we assume that most of them, and a lot of them do have like roughly like 28 to 30 watt per terahash, joule per terahash efficiencies, if we break below 40, they're not going to be having a good time for sure. Some of them will, at least.
Got it. Well, it's something to keep an eye on for sure. I know I always check the hash price because I think it's there's a lot of information packed in that one metric, honestly.
Yes.
Yes. Yeah. And so, but you still have hash rate running. You said you're hearing whispers that a lot of Russian buying is happening.
Yeah. I can't confirm. I've been told.
Can't confirm.
They've got hash rate.
Whispers. But what are the odds that, like, is hash rate just going to continue going up? Because I feel like a lot of these new machines came online finally, and it seems to me like it could slow down, but we still seen it just continue to rise. Like, what are the odds we actually get to like 1 zettahash next year, maybe? Like, at this rate, it's wild. So like,
it's going up forever, Laura.
It's going up forever.
It's going up forever.
I mean,
I think there's a
capacity
chance we get
into it too, right? Like, there's an infinite capacity for this.
Yeah, the capacity is one factor too. So it's like, what are some of the constraints, I guess, to hash rate, or to like what would make some of this like cool down, I guess?
I mean, definitely supply of
supply of ASICs and capacity to
it just takes time to build out the capacity.
Yeah, that's it for sure. I mean, that is the thing, right? Is like you can't just buy a bunch of ASICs and just like throw them at a energy generation source and just have a good time. But that's one of the things where like the capacity problem becomes easier with time as you have more professionals working in the mining space who build out expertise in constructing these things and running large scale farms. I think that we might get a zettahash by the end of next year. We definitely won't get it this year. I actually feel pretty strongly about that probably not happening. It's definitely in the cards, I think, for next year. I think the biggest thing though is like, in terms of like how high does this go? Once Bitcoin mining is a feature of energy systems, and it's just like all bets
Yeah.
are off.
Agreed.
You know, like, and like I think that's probably just going to happen eventually, unless Bitcoin just stops existing or it just craters in price or it becomes less relevant. But you know, you're building out in literally any energy system, hydro, nuclear, solar, wind, nat gas, like plugging in a Bitcoin farm at a certain scale just makes sense. So
Yeah.
I think that's probably, this is not like an original take, but I do think it's probably true. You know, eventually you're just going to have like Bitcoin miners will not exist in like 25, 30, 40 years the way they do now. There will be people who specialize in it, but like the largest miners will be energy companies, and they will be energy operators. And one of my favorite kind of scenarios that I've heard described is actually from our boy Drew Armstrong. Talks about how, like, you know, 20 years into the future, you could see conceivably wild swings in hash rate when transaction fees, let's say they like just moon overnight and go from, you know, an insubstantial amount to a substantial amount, increasing mining revenue. Then you could basically just have like data centers on some of these power plants that just fire up to capture that revenue in an intermittent time frame, and then they just turn off once that's no longer juicy. So I don't know, it's like kind of like a far out thing to think about, but you know, I really think the ceiling is kind of like Matt said, as long as there's energy supply and capacity, then this thing just keeps growing.
Yeah.
What do you guys, you know, Bob Burnett brought this up on Swan Signal, and it's something I've just continued to think about because it makes so much sense to me. But he's like, you know, the merging of the energy industry and the Bitcoin mining industry might be a little overblown, and what's not appreciated is the potential merging of the financial industry and Bitcoin mining. And it's because of these ETF issuers who will want to actually control the block space, and they're really quicker to move and they have the funds than say an traditional energy company. And so somebody like BlackRock or somebody like a Fidelity could really come out and start, you know, either acquiring Bitcoin miners or like setting up their own operations so that they can actually control the block space to manage kind of the plumbing of their ETF products. What are your guys' thoughts on that? Because that's an interesting theory, and it makes a lot of sense to me in some ways.
Yeah, what do you think about that, Matt?
I think it's super interesting. It's kind of timely too, because like, so it's not a direct answer, but we're launching an exchange listed futures contract. You know, so the other two contracts I mentioned were our forward contracts that trade over the counter, but we're doing one that's literally on a Bitcoin exchange. So people have access to it. And we made the announcement on Tuesday, and we're going live in a week. But I've already had people like kind of asking, you know, if we'd be interested in doing an ETF on it. And I was like, wow, that was really quick. We're not even live yet. It got me thinking though, like and like I was thinking, to your point's a little bit more interesting is, you know, if you do control the hash rate and you can do it in that way, I think it's a legitimate scenario. I think, you know, it's not just game theory. I think it's pretty far afield from here, but I would be surprised if they're not thinking about it.
So I guess my question is, what is the benefit? Is being able to produce Bitcoin under spot so that you have even more?
I think the idea is
margin on the like.
There's a bit of dependence on a third party, mainly the pool coordinators, to actually include transactions when they're trying to actually do the plumbing of the ETFs, how much they have to move Bitcoin and transact in Bitcoin underlying the ETF every single day as they settle it. They'll want to have like at least run their own operations just to make sure it's running efficiently. They don't have to trust another company, or at least partner with one specifically and build a relationship with them.
Yeah, this would be a massive endeavor though. Like that's
it would be huge,
insignificant amount.
And I think they would probably end up using sorry, Luxor team, but they would probably just end up using like a foundry or something like that, right? Like they would end up using.
Yeah. Why do you say that? Why do you think they'll likely do that because like it's just so much easier.
like to just like there's a reason pools exist for Bitcoin miners, right? And it just makes everything a lot easier. Having to actually stomach the variance of block fines is brutal. Maybe these guys have enough hash rate to where it doesn't matter as much, but even just like managing that architecture and trying to run everything smoothly is just a very, very difficult thing. And so I think that they'll probably just try to make it as simple as possible. And just using architecture that's already in place makes sense for that. I do kind of see, sorry, or acquire it.
Yeah, acquire it, not use it.
Yeah, that would make sense too. And I guess I could kind of see the benefit of this from the ETF perspective, because instead of having to go through a custodian and like bidding, against everyone else, and like you're driving up the spot price of Bitcoin, you can just like produce it yourself and bring it in to feed your ETF, rather than having to go to some sort of broker and try to buy like, tens to hundreds of millions of dollars of Bitcoin.
Yeah, you can
But
source.
then they're not going to, yeah. But then again, like if there's huge demand, it's going to outstrip what they can mine anyway.